Budget airline Ryanair reporting full-year after-tax profit of about $1.8 billion. That was down about 16% year over year, but also slightly ahead of what the street was expecting. Ryanair said that its average fare dropped by 7% throughout the course of the last year, which drove up traffic 9% to a record 200 million passengers. It also said that demand is looking strong as we head into the summer months, and that's probably why you see the stock up by about 5% this morning. Joining us right now is Ryanair's Group CFO, Neil Sorahan. And Neil, thank you for being here
Becky,
today.
Pleasure to be here. Thank you very much.
Was that a fair assessment of where things stand and what happened?
Yeah, I think that was a fair assessment. As you said, we carried over 200 million passengers last year, which was a bit of a milestone for us. We've been trying to get there for a while, so delighted to become the first European airline to break that 200 million mark. Costs were in very good shape last year as well. We delivered flat unit costs at a time when all of our competitors are seeing their costs going in the opposite direction, so huge competitive advantage. And as we look into the summer, as you said, demand is robust all across the network. We've 2,600 routes, and they're all booking well at modestly higher fares than we had last year.
So are you going to make up the 7% decline in fares?
We would hope to make up most of it. I don't think we'll make it all. And visibility is very limited at this time of year, as is always the case. But I think we'll make back a good chunk of it.
Why is visibility limited now? What can you see? What do you see? When will you have a better
It's the nature of the airline industry. People book 3-4 months out, so you just don't have that visibility into the peak summer months yet. We will have to see what the close-in bookings look like. And then when I look beyond kind of September, sure, like I could nearly ring up everybody who's booked at this stage and say hello to them. You have very limited visibility into the second half of the year.
So particularly, I would assume when you're dealing with customers who are looking for the best price on things.
Yeah, and that's where Ryanair comes into its own. You know, we had an average fare last year of about $46 a ticket, which I'm sure makes people cry on this side of the Atlantic. But that said, we've got the lowest cost of anybody, and we generated about just over €8 or $8 profit per passenger. We'll hope to improve on that into the coming year.
We just talked about tariffs and what that means. How does that play out for Ryanair, I guess, with the airplane deliveries maybe from Boeing?
It's impossible to say at this stage. I mean, nobody really knows if they actually will come to pass. We're into a 90-day pause period at the moment. The EU and the US are in discussions with each other. I mean, as things stand, aviation has enjoyed an act that goes back to 1979, which has exempted civil aviation parts, simulators and engines from tariffs on both sides of the Atlantic. It's worked very well for Boeing. It's worked very well for Airbus. You know, I look at Airbus. They deliver a lot of long-haul aircraft into the US, more than Boeing are delivering into Europe. So I think it would be a bit of an own goal if it was to come to pass. So hopefully it won't. Hopefully sense will prevail. I think there's a bit of a scramble to maybe pull back a little bit from some of the tariffs that were initially announced. But our view would be very much that, you know, we've a fixed price with our aircraft supplier, Boeing, and various other parties. We would expect them to honour that. We see tariffs as their problem, not ours, but we'll clearly work with whoever if they do come to pass.
Whoever is receiving the goods that pays the tariff.
No, we have a price agreed, and that's very much our stance. But I'm hoping sense prevails. I'm hoping it doesn't come to pass. If it does, we'll work with our suppliers to try and minimise the impact on them.
What has Boeing said about this? Have they agreed?
They're like ourselves, very much of the opinion that the 1979 agreement should hold. We're all pushing that very hard with our respective governments.
What else are you watching? I mean, oil prices have come down, which means jet fuel prices in turn have come down too. Yeah,
there's been a big advantage. The volatility in the oil price, particularly since Liberation Day, has given us an opportunity. We've got a very strong balance sheet. We've got very long hedge lines. So we've been able to jump all over the fuel price.
How far are you at?
We're out to the back end of our fiscal year 27, so out to March 2027. Wow. We've locked in, I'm going to talk in Brent. We've locked in at about $66 a barrel into FY27, which is about $10 cheaper than we are into this year. So that's a huge saving for the business. We're about 40%, as I said, hedged on that into FY27. We're about 85% hedged at $76 a barrel, which is down from 79 last year. And of course, we've been locking in the currency as well. The dollar's weakened. We pay for our fuel in dollars. We pay for our aircraft and our capex in dollars. So we've been looking at that as well.
So it sounds like you are firing on almost all cylinders. Strong demand from the consumer. You're hedged out. You've got hedges locked in, not just with oil, but with the dollar. Things are going well with the outside exception of the potential for tariffs. Is there anything else to worry about?
Things are going well, but that's when things are going well, that's when you get nervous in the airline industry. I'm nearly 23 years in it at this point in time, and there's always something around the corner. So, we do our best to try and look around the corners and see what might be coming at us. But as you said, the environment for this summer is shaping up well. The consumer wants to get out there. I think they're fatigued listening to all this news about tariffs. They want to get out and get a vacation. They're doing that in huge numbers. They're paying a bit more for it this year. We've launched a buyback on top of the 1.5 billion that we returned to shareholders last year. We've announced another 750 million buyback, which will go live in the next couple of days in our open period. So that again, I think, is evidence that the balance sheet is in a very strong position. We're preparing to pay down our 850 million bond out of cash in September, and we will probably pay down our remaining bond in May of 26, 1.2 billion when it comes up. So we're in a very strong position. We own our aircraft, they're unencumbered, we're paying down debt, and the costs are in rude good shape.